Hello and welcome to the CXO Conversations. I'm delighted to be joined with Gabriele from the co-founder of Hercle. And so, I've met you now for the first time a couple of days ago. I've seen you around. We've had a few conversations already. But I think the most important question I'm going to ask you, which would determine how this conversation is going to go, is what was the first job or profession you wanted to do as a child? What was that first moment, as an innocent child, thinking about, what the world would look like, what your place in the world would look like? What was the first thing you ever wanted to do?
Thanks, Pat, for the questions and for having me here. That's a difficult question because framing. I remember the memories of a child is pretty difficult. You tend to have mixed memories on a certain extent. I recall two different types of jobs, actually. Okay. I was an avid reader of Topolino, Mickey Mouse.
Oh, yes.
And there was this character, Pico della Mirandola, who was inspired by an Italian inventor. He was the inventor. And I always liked the guy, a bit quirky, always, around trying to invent new things. So that was one job. And the other one was I wanted to be an archaeologist. Actually, I was really into archaeology, even historical thriller, Indiana Jones, all that stuff. That was I'm from Rome, so we even in the primary school you get to use that, and that was nice. Yes, that's.
Well, I was going to say in Italy, there's a lot of artifacts in Rome. It's beautiful for that, but the Indiana Jones inspires many people. I think there is something about that character. And the way, I think it was Steven Spielberg's movie, the way they made that was inspirational for a number of people that were growing up in the 80s. And then you mentioned around inventor. So there's quite a linkage between an inventor and an entrepreneur. There is a close affinity between the two because you're both building for something that's new, a gap in the marketplace. And so I kind of wanted to see your journey. You've been in Fintech for a number of years. What made you move to become a founder? And in particular, why cross-border payments? What was the aha moment for you?
Thanks for the question. I believe among my co-founders, I'm not the inventor. Actually, our CTO is much more an inventor compared to me.
You're the techie.
Yeah.
Okay.
I'm not a tech in the group. I mean, I love the tech, but I still have an high level understanding.
Yeah. Okay.
But so I'm more the guy who find the resources, motivate the team, give the direction, maybe find the right path to achieve the goal.
Strategy.
Yes, that's
okay.
A bit more my thing. Going back to your question, I started, diving into fintech when I was actually I only did fintech in my life basically, and I got into fintech from crypto assets, more in particular from Bitcoin, and the reason why I got into Bitcoin was mostly on the political monetary side, right? This crypto anarchist type of vibe, and there was a lot of readings about how money should work and why money. And so I always got really into this type of concept of money. And the way I see that, it's, as Aristotle used to say, the man is a political animal and we have interactions. Yeah. And money is just the simple way and the most efficient way, the scales, to keep track of these interactions in the space and time. And that's what makes a human, an amazing species on the planet. So because we can interact, we can grow, we can exchange ideas, favors, goods, services, and so I always wanted to facilitate that. We got from the Bitcoin payment space. I went to the trading space, but at some point I was let's say a bit frustrated in the sense that the crypto space had become much more a casino rather than any type of added value, except for a few business cases that are still solid. And at some point, a client called me, and actually a shareholder called me and told me I want to buy a ship of some type of iron in South Africa. I used a bank it was really, really slow. I got issues with the supplier on the other side and with the forward that I was using to hedging my currency risk, etc. So why can the guy called me and told me, could I try to use stablecoins to do that? We're like, yeah, sure, let's try to do it. And we did it. We deliver a big clip, actually. It was a relevant size payment size, sizable payment from Switzerland to South Africa in less than 20 minutes. And so I said, okay, wow, that's the thing.
Cheaper?
Was it cheaper? And also, in addition to cheaper, you need to account also for cost of capital and all the opportunity costs that you have, the hedging, if the ship is in the port and the payment is not arriving, you're going to pay fines because the ship is stuck in the port. You have a lot of these dynamics. And so I said, okay, this is amazing. We're actually addressing a real pain. And it's great to see, clients and partners happy because you are addressing a really strong pain. And so we said where we should focus, and we look into developing markets, Latam, Africa, Middle East. We believe those markets deserves a better way to receive or some payments. And this would improve a lot and would make those countries GDP growth because they will be able to participate much better in the global trade and lowering the cost of doing business. So yeah, that's from the angle from which I entered. And I feel like it's really good because we develop a good knowledge of fintech and banking as a service, all this, complexity when it comes to banking, AML, RFIs, and API connections, so with the bank accounts and etc. But on the other side, we have a really, really good knowledge in trading. And when you're doing cross-border payment, there is still an FX change, right? And so being able to do that properly improves a lot the pricing for the clients.
For sure.
So those two skill set that both myself and my team developed across the years, I believe they're really a good fit for what we're doing.
And so the corridor that you just mentioned, it's the corridor from Europe into Africa, Europe into Latam, and vice versa.
Yeah, not necessarily Europe is the starting point. We can do also Latam to Africa, or we tend to do Africa to Africa. Funny enough, Africa to Africa is much more broken than Africa to Europe. I
know, it's very sad. It's very sad because sometimes through corresponding banking, it has to go up to Europe and back again, even though it's only traveling a country away or two countries away.
Yes.
Let's talk about that. Why is it not fixed today?
It's just
why is that not?
It's just there's just a lot
greed.
of.
Is it greed?
It's fragmentation. There is a sort of incentives that are against that. Why you need to solve something that is making a lot of margins for a few players.
Yeah.
Even the system, how it is designed, the correspondent banking system is the way we are processing payments, and the way it is designed, it facilitates a lot of economy of scale. So the bigger you are as a bank, the more connection you have. And therefore, the bigger you are as a bank, the more the clients are incentivized to go to you, right? And that's why you have a sort of privileged position, and that's why you don't need to adjust. But I believe stablecoins, are here and they are addressing this problem. Actually,
has been opened.
Yes, now the Pandora vase is open. Exactly.
I think the man from the West has opened that box, and the world now has an acceptance of stablecoins. But linked to this and linked to what you were saying, do you see a world, if so when, that you don't need US currency to be able to facilitate these transfers across? Do you see that world happening?
That's the right question to me. It's we have been speaking with a lot of central banks here, and what they are afraid of is dollarization of their economy.
100%.
That's a real
if it's
problem.
Switched off, then your country is crippled.
Yes, that's a real problem, especially because if the citizens are buying the unstable coins, what they're actually buying, it's the underlying is US debt. Dollars. And so US is able to finance inflation at the cost of the emerging or the other countries, right?
Yeah.
The thing is, in order to facilitate cross-border payment, especially in sides, you need to. It's not a matter of currency; it's a matter of deals or trade deals. How counterparties, a supplier and a buyer, they want to settle this trade deal. And US dollar at the moment is still the currency with the vast majority accepted. I mean, that is accepted from the vast majority, right? I believe it's changing. We've been seeing initiatives from BRICS or even bilateral agreement between Europe and Africa that are going to be settled in Europe. African countries are waking up on this, and they're trying to, to enforce some policies to address that, right? I believe the more the global trade increases, the more you are going to find liquidity in emerging markets, the less you're going to be bonded to US dollars.
It's a liquidity challenge, isn't it?
The liquidity, yes. It's all about liquidity.
How do we address that liquidity challenge? Is there a way to address it?
That's a bit of our secret sauce. You may find different type of strategies, right? First of all, you want to be plugged into the majority of liquidity provider as possible, right? Sure. So that's the first thing. The second thing is, if you are able to, a lot of African countries, the GDP, a good percentage of the GDP is related to commodity trading, and more precisely to the commodity that they are exporting, right? Sure. And let's say they have gold or lithium, right? And therefore, if you have a good understanding of the underlying market of the country, you can understand also the dynamic on the interest rate and the currency movement of the local of the country, right? And so market understanding is really important. I'm saying not about the currency, but precisely on the trade that is happening in the country. A lot of liquidity providers and banking partners. And then if you're the one who's facilitating a lot of flows, you can do something that's called netting, right? Mm-hmm. So, for example, we do that in some African countries because on one side, we have the remittance flow, which is cash in, right? On the other side, you may have cash repatriation from big commodity traders or refineries or oil groups. And so you can net those flows. And in this way, you can also adjust for the capital control laws. Regulators are happy. There is a good reporting and there is no money flowing outside, to be honest. And in addition to that, you can even save on the FX spread, right? Because you are netting. So those are the thing. Lastly, I would say you need to hedge, no? On the market making side, you need to hedge. Now, the way you do this hedging really impacts the pricing and the liquidity. Mm-hmm. So what you can do is some statistical hedging. You can apply some sophisticated method to hedge.
That's all part of your model.
Yes, exactly.
Got you, the secret sauce. Okay. And do you see, we're going to come on to the general sentiment in Africa on stablecoins from the public sector. We'll come on to that in a second. But do you see a world where you could have a multi-currency stablecoin? What would that look like?
So multi-stablecoin pegged. I see that. I believe it's going to happen. I believe we are going to see a lot of changes in the way money moves, or in the way money are issued from the central banks overall. You can call it central bank digital currency or whatever, but I feel like we're going to see that. I believe in general, something that it's happening is even with stablecoins, since the reserves, it's mostly, the issuers want to make money out of it, right? So the reserves can be in cash or cash equivalent, where cash equivalent are short-term bonds, right? Yeah. So that's something that central banks are looking into that. At the end, it's tokenized debt without giving any yield. Yes. Yeah. And so this is happening. So some interesting studies. I'm not sure it is going to happen anyway, but that's definitely interesting on a, let's say, pure theoretical and aesthetical exercise. Yeah. It's having, especially in Africa, current stable coins pegged to commodities that are actually in the country. That makes a lot of sense, right? Yeah. Especially if those commodities accounts for a good portion of the GDP, right?
There was a bit of stability to do with these commodities as well, which makes probably you'll get the trust factor that it's not going to devalue. Okay.
It's hard. And the way I'm framing this, and even the reason why we keep investing in Africa, apart, all the financial inclusion we want to bring to the country. People. Yes, but apart of that, it's. With AI, the technology problem has been addressed, right? And so there is a sort of a run back to the basics, to the commodities. So we believe there will be a sort of commodity super cycle, in the next 4 years, 5 years from now.
Yeah.
And where are those commodities? Latam or Africa, especially, that's where there are. And those countries wants to also improve the way they extract those commodities and even the environmental footprint and whatever. And they need capital and capex to do that, right?
Mm-hmm.
And I believe, stable coins overall, or even tokenization of those assets, to a certain extent, if it makes sense, can give an advantage.
Can make a difference. Yeah. So we at GFTN, we've been in Rwanda for a few years now, and what I've noticed this year and compared to last year is the willingness of regulators at the senior levels, governors, deputy governors, to discuss and talk about stables, and to be willing to be in a room in a closed door setting, which I think you were there a couple of days ago, which I thought was fantastic. It shows progress. It shows a willingness to move beyond sometimes a fear that is driven by media, which sometimes, there is a lot of myths about this technology and the underlying technology. But what have you noticed over the past kind of maybe this year? You've been in and out of the region. You've been speaking to regulators. What have you noticed, and why is that change happening?
That's a great question, and that closed door roundtable was amazing. I mean, I never seen.
What were your takeaways as well? But carry on.
Yeah,
some of your takeaways. Yeah.
We saw every governor or every central banker that was in that room. There were at least 20, probably something like that, 15.
There was a lot.
Yeah. Really, there are few pioneers, and then the other side that were a bit more followers. But everyone was willing to understand properly what strategy should put in place. Everyone was taking place.
Yeah, which is
I remember that there was a governor from a central bank that says, I would like to understand how many of governors here are students. I don't know if you recall that. Everyone was taking notes, and they wanted to do a framework. And so they're working a framework. So I believe what changed is that, first of all, the overall awareness, but then everyone realized that this is unstoppable, right? And either they cannot do anything. Some of the global countries, even in Africa, they try to stop the usage of stablecoins, but then the black market, or the citizens find their own way to use that anyways, right? So it's really impossible to stop, and that's why they are saying, okay, I cannot stop it. What should I do to regulate it, but at least to see the flow and have a good reporting in order to don't jeopardize my monetary policies and all my equilibrium that there are for central banks, right? Consumer protection, capital controls, and etc. So it was really. I believe between 2026 and 2027, we're going to see almost every African countries that is going to issue a framework for stable coins, payments, or digital assets. And something that I realize is this. Since everyone is understanding and everyone is in the same basically level playing field, because they're at the same level in this moment, there is even a strong collaboration amongst the central banks. And this is not something that is generally common in a big continent such as Africa. And so I was really amazed by that, actually.
Yeah, no, it's I think it's been one of the big stories over the last few days, and certainly for this year. And I'm just excited to see what comes next now. And maybe even, there's been some conversations around certain jurisdictions, regulators coming together to build certain projects with the private sector. And that's when I think it starts to become a game changer, because then you can look at different ways to apply this technology in real world settings. So that's great to hear. There's a couple of bits. I'm going to move a little bit off stablecoins. We've talked quite a bit around that, and we're coming to the end of this conversation. But what would you say are like one or two of the defining moments in your career to date? You're still super, super young, which is a great thing. The one or two moments that have defined who you are today.
I would say, so the first friends and family capital raise, that was a thing, because your family they were not friends. Family, actually, were just friends, to be honest. Okay. But in that moment, there is, someone is giving trust to you, and you own them this trust, and this gives you a lot of sense of responsibility, and push you a lot to keep delivering and keep working on that. Despite all the team was really into what we were building, and it was we were having fun, so it was not that much a sacrifice. So that was something, and I believe before my career, I recall really well the moment when I discovered Bitcoin, and I said, okay, that's the thing. There was the the first night I discovered Bitcoin, I recall I was at 2 a.m. in the night. I was playing around on Reddit and the laptop, and there was this paper from Nick Szabo about what is money. It's precisely on this blog called Unenumerated, and that for me was as a young teenager, that was before was really it was blowing up my mind. I never thought about the money in that as an instrument in that type of context, and that was really something. Yeah.
But you think about money. There are 6 or 7 basic use cases with money. You want to spend it, you want to save it, borrow it, manage it, lend it. I think there's 1 or 2 others. I think it's 6 or 7 simple use cases that consumers and businesses want to do. But over the years, probably, at least the last 20, 30, 40 years, we've put these rules and we've put systems and people. And the people, systems, rules, and processes, they're legacy. They were made for an analog world, not a digital world. And there is still large parts of the world that are stuck in this legacy. And sometimes people like to protect this kind of legacy world, this legacy system. And so that's what governs how you do those 6, 7 simple things with money. But you're seeing a change now. We're seeing a change. And I think there's a beautiful book around the psychology of money that talks about different cultures' use of money and how they think about spending it or sharing it or borrowing it or lending it or managing it in any way. But it's something that is absolutely changing, and it's an exchange of value, and it's how you look at that. Okay, and then I think we're literally done. I was just going to ask you one question. So when are you moving to Africa?
I'm thinking to move to Africa full time, actually.
Yeah.
Yes.
Okay, that was a random question.
I'm thinking to move to Africa full time. I mean, we really want to focus on this market because we believe we can resolve a lot of problems for the market, and we can provide value. And we love the vibe, we love the people. And I'm thinking to move, end of the year or beginning of 2027. Let's see how it develops. I was
absolutely fishing there.
No, I'm really thinking about that.
Where would you go? Where would you move to?
The way I'm framing this is I don't speak French, unfortunately, whereas my girlfriend speaks French. So she's pointing much more towards the French side, whereas I'm thinking a bit more about Kenya, for example. There was a really between Italy and Kenya at some point in the 90s. There were really tight relationship. So there's a big community of Italians. I do have a few friends there as well. And that would be something. And also I love Kenya in general as a country. And so exactly. So that's something that I will look to be honest.
Fantastic. Okay, that sounds like we got a scoop here as well.
Yes.
But thank you so much for your time, and thank you to the audience for listening in on the CXO Conversations.
Thanks, Patel, for having me. It was great to have this chat.